Good evening, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for a day that I was pretty happy with, in the sense that on this Tuesday, the 24th, we had a big rally on Monday. And then today, May 24th, we come down. What did I say yesterday? Big rallies on a Monday often lead an attempt, at least, to reverse them on a Tuesday. It's exactly what occurred. Now, the market that was the strongest was the Dow. The others all stayed weaker, but it's 30 stocks that make up the Dow. A lot easier to jump around that. The dollar index has been under a lot of pressure, as we've seen that the marketplace is saying now that Europe has reopened itself to the idea of raising interest rates through the European Central Bank. The dollar's prominence with that disappears. Other banks will be joining in, as it's now bank after bank after bank talking of raising the interest rates. Energy prices staying strong. This is the driving season coming up, so I was looking at gasoline. Still looks to me like the pros are stepping in. Tomorrow we're going to get durable goods, and tomorrow we get the FOMC minutes. You want to be looking at that. We saw today new home sales in the toilet. Existing homes might be okay, but new homes, they're going to be in the toilet. Think of inflation. Just use that word. What's it cost for lumber? What's it cost for labor? What's it cost for land? You put it all together and you got one new problem. How do you price it? And how do you price it in a way that you can get the banks to back what you're doing and your clients will qualify for it? Custom home building, people with money that don't have to worry too much about a mortgage, okay, that can still go on. But that's not what we're talking about. We're talking about the builders that are running these masks for homes. Down and down sharply, and probably going to stay that way for a while. So we're down to the point where analyst upon analyst on TV has given reasons why we should now be ready after a 7-week break in the market for the market to put on up to 3 weeks of a rally. I heard that today, and I can't argue it, okay? Because the facts that the person gave, they made all the sense to me in the world. Is the market going to stay in this pattern? No, I can see where it gets a bounce at any point in time. I think it begins, frankly, if you take out 3982.5. That could give you the first time that we're getting higher lows and then a higher high. After a good long break in the market, that could set you up for a test of the 40-2350 area. And if you close over that, well, then maybe you open the door up for getting back to a challenge of a Bollinger Band. Am I saying buy it here to get there? No. I started this with if you're going to get a bounce, and some people think it could be more of a reaction where you have to unwind all this bearishness to some degree, get the market back into balance, because it's out of balance. You just had wave upon selling, and it doesn't matter who you talk to. I mean, it's just a beaten up market. You could get a short covering. So that's what I'm presenting to you. I don't see a new sell signal. You know, if you sell the 18-day average, you've broken that downtrend pattern. And momentum is just staying oversold and absolutely refusing to embed. I teach that when you have a reading in the slow stochastics, any number under 30, it's oversold. And when it's oversold, I avoid deploying, if you will, new cash in the market to the short side. In the NASDAQ, you're still oversold here. Nowhere near even trying to embed. A similar pattern, but not quite. Why? If you take a look right through here, the market had that rally that broke this downtrend. In fact, you had two steps like that right here. Outside day up, and then a very fast reversal all the way back down. So, what can this market do? Well, the fact that it didn't take out this outside day down 2 days ago says to me if it's going to rally, it's probably not going to be an explosive one. Again, one that might want to get back to the 18-day average. Is there an edge in selling a market that's this oversold? No. Is the trend down? Absolutely. Is there a reason to go long? None. In the Dow Jones, we've got the trend down. The market 3 days ago came in, hit the lower Bollinger Band, has given you a bounce. The market is working away from being oversold. In this market, I wouldn't be surprised if the pros test the market and resell their positions at 32,210. That general zone looks to me like the resistance. You break the downtrend. If you get back over 32,693, I'm not saying this is for the faint of heart. That's a 400-point risk. That's real big. So when you don't get the right type of risk reward, that too takes some traders out of the market. We'll see what happens. I'm not trying to give you the idea this market has to bounce. I'm giving you the idea selling the market down here is getting a little more dangerous than it had been. The Russell's the same story. The momentum is flattened out. Excuse me, the trend is down. You had an outside day down. For 2 days, you didn't bother taking out that high. If you take out the high now, you negate the downtrend. First challenge would be 1803, then we have to see what happens. If you were sitting next to me and saying, Ira, is there a good short sale in these down here? My answer is no. I don't see a good one to go with. Let's see if the VIX will load up the data. There we go. It's always slower. In the VIX, we don't have a trend any longer. Yes, you have the pattern of lower highs, but you also have higher lows, and you've married yourself all of a sudden to the 18-day average of closes. You know, it is going to be a shortened week. A lot of people are going to leave on Friday. It could be that after tomorrow, trading just starts winding down, and this market doesn't want to break out of those Bollinger Bands one way or the other. I've seen that more than once. In the bond market, I think the pros came out of all their position today. You get up to the upper Bollinger Band area. You don't need the very last ticket. They could wait for it, but you're in that zone on sideways action. I seriously doubt you have much of a rally left in the market. That is not a reason to be short. It is a reason on this rally to consider taking money off the table on longs. The same thing, and even more pronounced in the 10-year note. I mean, if you for 1 minute think you're going to keep rallying in this market and just keep dropping interest rates, okay, let's assume. But why would that happen? It would probably have to be a meltdown in the stock market. That's my own guess. And that might get everybody's attention. I've got to own something else. I'm petrified this thing's getting out of hand. We just went through those charts. So far, they're not looking like that at all. In the dollar, you're down to the lower band. I think the pros are out of the market on the short side. That does not mean they're bullish. This was the area that I teach, the first challenge of a Bollinger Band, what I call the quote-unquote smart money comes out, and I say the same thing in the euro. Could you keep going? Sure you could. The trends are up and down, respectively. So what? The odds of staying over these bands aren't good. You know, they're opening a casino, or tomorrow they vote on it, for downtown Chicago, of all places. I wish that I could play the Bollinger Band theory in a casino. I wish I could. I'd have some fun and good food and drink, but you can't. And don't tell me the marketplace is the same casino. It's not. Nothing like going into a casino having a good time. And folks, I am the smallest gambler you ever saw. I'm so disciplined. I'll go in and I'll have X amount of dollars. It's there to be lost, have a good time, and then lose it and do other things. They build those buildings with their profits they make off of us, not they're giving away their money. Higher lows, higher highs. Looking at the market at 126.42, that's your resistance point. I don't see a setup here yet that would turn the trend down, and the market is still overbought as can be. It's difficult markets right here. Now, in Bitcoin, can it get itself up and do anything? In order to prove it, it's got to get over 30,715. If that occurred, it gets exciting. Now, if it starts breaking under today's low of 28,570, that could be another bearish element that kicks up the potential for 24,480. So who's on the defensive? Not the bears, the bulls. Anybody buying, you've got a defensive move. You've got to clear that number. Then I think you've got the bears on the run for the possibility of 31,894. When we look at the differential between the two different energies, Brent and WTI, as we said, $2 was too cheap, but this area is probably getting expensive, the $4 range. If you look at Brent, still very much in an uptrend. The market's got resistance at 116.82. Momentum is up and overbought. Is it trying to embed? Well, it is trying to get both numbers for the first time back over 80. It's only 6:30 at night. We've got a long way to go, and it's day one of doing that. So you're approaching resistance. What about the slow stochastics in WTI crude? No, you're not doing that. Both numbers are not sitting over 80. The trend is up. You don't do any real damage if you fall back to the 18-day average on either anyways. But overbought, are you going to attract new money becomes the question. Now, gasoline, I think the pros are going to nibble right now into the long side, and I think they'll probably have stops right under today's low of $3.53.70. See that? You took out that high in early trade tonight from today, and that opens the door for this window. If the trend's going to be up, you got your higher lows, lower highs. Do I think it's worth a probe? It's a difficult one. And the reason is you really got to get through 370, 373 to break the pattern of those lower highs. Well, by the time you get up there, you got too much risk back to the low. These markets are not offering easy trade at this point. And I'm so proud of myself with the net gas, because I had stuck my neck out and told traders, you're going to see a 9. And you got up to 914, and I'm very pleased with that. Overbought, trend still up. Well, I can't catch all these moves. They're difficult, okay? Sometimes the risk factor is too large, and you play it accordingly that way. You still look for the game, which way should I be? Sometimes doing nothing is a winning strategy. It keeps you away from selling too cheap, buying too high, and you're looking to get the market on your terms. And that's what I try to do in my morning videos. What do I do? First thing in the morning, 5:30, I'm recording, showing you and opening a whole program of trade for you. Buy here, sell there, and here's the chart picture. Here's why. Here's where the stops would be. I'm looking at the market doing blah, blah, blah. I back it up. I look at both daily and weekly charts. So every weekend, you're going to get your weekend update, looking at where the weekend, the bigger picture is. Sometimes the way to trade the market, forget the daily. Sometimes the whole plays off a weekly chart. More risk rewards that make sense, not as much noise in the market, and you're trying to catch longer term moves. Either way, why don't you give yourself a chance? Take a look at the research I put out and make up your own mind. Go to our website, under the word research, everything is laid out there. I'm Ira Epstein. Have a great day.